You have spoken and I have listened. Over the past few weeks, I have ran a few polls both on Twitter and here on YouTube about what other videos you would like me to add into my regular schedule, and the overwhelming majority asked for more stock analysis videos on individual stocks. Today, we are going to break down the two largest home improvement retailers on the market today. That is Home Depot and Lowe's. I will break down each of these companies, look at various metrics to compare to one another, and take a look at some of the differences between both companies. And lastly, see which one appears to be the better buy at this very moment. So with that, let's jump into the video. Hey everyone, Mark here, back for another video. And before we begin, I want to send out a special thank you to today's video sponsor, The Motley Fool. If you head over to fool.com/Mark, you could receive their list of top 10 stocks to buy now. Alright, as I mentioned, Home Depot and Lowe's are the two mega giants in the home improvement retail sector. Both of these companies are well insulated from the threat of e-commerce. In fact, the company is actually thriving with online sales where you buy online and then pick up in stores. Not too often are you going to go onto Amazon and buy a 2x4. All right, as I mentioned from the start, Home Depot and Lowe's are the duopoly in the home improvement retail sector. And we are going to break down both companies individually and then look at them side by side. Although there are a lot of similarities, there are a few differences that I will point out in today's video. And I must lead with I actually really like both of these companies. Both companies are cash flow machines, both companies have strong management teams, and both companies pay strong growing dividends. As such, let's begin with Home Depot, stock ticker HD. Home Depot currently has a market cap of $297.9 billion. On the year, the shares of Home Depot are down roughly 27%, and over the past month, we have actually seen a rebound in stocks as shares of Home Depot are up nearly 9% on the month. However, looking at the shares from their 52-week high, Home Depot shares have actually fallen 30%. Shares currently trade with a forward price to earnings multiple of 18 times right on the dot. And if we move over here to our fast graphs chart, you will see that over the past 5 years, shares of Home Depot have traded at an average earnings multiple of 22.9 times. So as we just looked, they currently trade at 18 times, and this blue line will indicate where the regular earnings multiple is over that time period. So you can see we are well below where the shares of Home Depot have traded. Next, let's take a look at the share performance over the past decade as it relates to the S&P 500. So the purple line here, you can see that shares of Home Depot have gained nearly 400% over the past decade, while the S&P 500 has gained roughly 175% during that same time period. If we move over one more, we can see that Home Depot revenues over that decade time span have grown from roughly $70 billion to now over $155 billion. Finally, let's take a look at the cash flow that this company earns from operations. You can see a huge surge here during the global pandemic when everyone was kind of locked up, and a lot of these home improvement projects that people have been putting off saying, I haven't had that much time, I haven't been at home as much. Well, now you're actually locked in your home, so a lot of that time and ideas came to fruition, and Home Depot and Lowe's, which we'll see, have actually skyrocketed during that pandemic time. But a lot of that pandemic gains are now slowly fading, but over the past 10 years, you could see how cash flow from operations have gained from roughly $7 or $6 billion and are now on a trailing 12 months around nearly $14 billion. Again, this is a key factor to look at because free cash flow is an important metric to look at when analyzing dividend stocks. Free cash flow is where dividends are paid from, and how you get free cash flow is you take the cash flow from operations and you back out any capital expenditure costs. And from there, that is where dividends and debt is paid down. Next, let's take a look at the dividend here. You can see that the dividend yield is right now right around 2.5%. Over the past decade, it's been roughly around 2.25%, so we're a little above that right now. And you can see how the dividend has increased over the past 10 years from roughly, call it 30 cents on a quarterly basis to now $1.90 per quarter. Moving forward with those dividend stats, you could see that we have that dividend yield of 2.5%. On the year, you're going to receive $7.60 per share that you own. The payout ratio is 45%, meaning there's plenty of coverage for Home Depot to continue increasing that dividend moving forward. And speaking of increased dividends, over the past 5 years, Home Depot has increased their dividend at an average rate of 17%, and they have also increased that dividend for 12 consecutive years and counting. Now let's take a closer look at valuation. Looking at the screen here, you can see that the 2023 adjusted EPS, now these are estimates from analysts, the average analyst estimate for 2023 is for Home Depot to earn $17.41. That would equate to a forward price to earnings multiple of 16.7 times. And as we just saw on the Fast Graphs chart, the average for Home Depot has been around 22.9 times. So you can see the shares of Home Depot are trading at a drastic discount compared to the 5-year average. Now turning our attention to free cash flow. Over the past 12 months, Home Depot has earned free cash flow per share of $10.57, which equates to a price to free cash flow of 27.5 times. Lastly, let's take a look at what the analysts are expecting. So analysts right now rate shares of Home Depot a strong buy, with 19 analysts rating the stock, 16 of those rating a buy, and 3 of those rating a hold. The average price target over the next 12 months is $360, meaning analysts are looking for roughly 20% upside from current levels. Now let's take a look at Lowe's, stock ticker LOW. Lowe's currently has a market cap of $120 billion. On the year, shares of Lowe's are down 22%, and over the past month, shares have rebounded, but less than Home Depot as they are up 3.6% over the past 4 weeks. Looking at how far Lowe's shares have fallen from their peak, which was the 52-week high, is currently $263. Shares of Lowe's have fallen roughly 25% from that peak level and currently trade at a price to earnings multiple of 14.7 times. With that being said, let's look over here at the Fast Graphs chart, and we can see that over the past 5 years, shares of Lowe's have traded at an earnings multiple closer to 19.7 times. So again, shares are trading drastically below their 5-year average, which you can see, which is that blue line here on the Fast Graphs chart. Now let's take a look at how Lowe's shares have compared to the S&P 500 over the past 10 years. Shares of Lowe's are up a staggering 533%. Meanwhile, again, the S&P 500 is still at that 175% return over the past decade. Looking at revenues, Lowe's has increased their revenues over the past decade from roughly $50 billion to now bringing in $95.4 billion over the past 12 months. And looking at cash flow from operations, you could see it looks like a little roller coaster here based on the pandemic gains, which reached a high point of over $12 billion at one point, but has now fallen more in line, trailing 12 months cash flow from operations of $9.2 billion. Next, let's take a look at the dividend. The current yield is roughly 1.9%, which is roughly in line where it's been over the past decade. And as you can see, this is a great dividend growth stock. Each and every year, they have increased their dividend to now paying $1.05 each and every quarter. Speaking of that dividend, you can see that the annual dividend payout is $4.20. The payout ratio is very low at 27%, meaning there is plenty of room for Lowe's to continue increasing the dividend year in and year out moving forward. The 5-year dividend growth rate is 19.5%, and Lowe's, this is staggering here, Lowe's has increased their dividend for 59 consecutive years and counting, making them a dividend king. Now let's take a look at valuation. So analysts are looking for Lowe's to earn in 2023 to earn an adjusted earnings per share of $14.60, which would equate to a forward price to earnings multiple of 13.6 times. As we saw on the Fast Graphs chart, Lowe's has traded at a 5-year average of 19.7, so well below that on a forward-looking basis. In terms of free cash flow per share, Lowe's earned $10.74 per share, which is roughly in line with where Home Depot was. But in terms of a price to free cash flow metric, Lowe's is trading at 18.5 times. Again, Home Depot was at 27.5. Lowe's is at 18.5. Lastly, let's take a look at what the analysts are expecting from Lowe's. There's currently 21 ratings on the company, with 12 of those analysts rating the stock a buy, 8 analysts rating the stock a hold, and 1 analyst rating the stock a sell. Currently, the average among all of the analysts have an average price target over the next 12 months of roughly $235, which equates to 18% upside from current levels. One analyst, the analyst who has the highest price target right now, has a price target for lows of $300 over the next 12 months. So there's a look at both stocks, looking at how they've performed from a revenue perspective, cash flow, free cash flow, and how the valuations kind of pan out between the two. And when we compare them to the past 5 years, you can see that shares of both Home Depot and Lowe's are trading well below their 5-year averages. Now, the companies both are home improvement retailers. They sell a lot of the same products, but they do have different focuses. And when you look at it, Home Depot actually earns roughly 50% of their sales from the pro customer, whereas Lowe's, they earn roughly 80% or 75% from the retail customer and only 25% from the pro customer. But they have been nibbling at that pro customer base ever since Marvin Ellison took over as CEO a few years ago. And in fact, Marvin Ellison is a prior Home Depot executive, so he knows exactly what made that company click. And that's one of the great things about Home Depot, is how efficient they are. When you look at their efficiency ratings, return on equity, return on assets, all of this stuff, their strong balance sheet, this is what makes Home Depot so strong. But I believe Lowe's is slowly closing the gap under this leadership of Marvin Ellison. He knows exactly what made Home Depot great. So when we look at the valuations side by side here, Home Depot has a forward price to earnings multiple of 16.7. Again, both companies are very similar, but Lowe's has a valuation of only 13.6. The company is still growing at a strong clip. Now, when you look at it from a real estate perspective, we are seeing the prices of real estate come down, real estate activity starting to slow. So that's going to be some concerns for both of these retailers really moving forward, and is really the big reason why both of them are trading at a discount. But if you are a long-term investor, this could be a great opportunity to get into either of these great companies. But if I had to choose just one stock to buy right now, I'm going to side with Lowe's, because they're closing the gap. There's a lot more room to make up. They're trading at an extreme valuation right now, extremely cheap valuation at only 13 times forward earnings. Come on. And I truly believe in the turnaround story that Marvin Ellison and his team is putting on here at Lowe's, and it is showing. The company is seeing strong online sales as well. Both of companies are well insulated from e-commerce, but the online sales where you get to buy online and pick up on store is actually turning out quite well for both companies. So with that being said, I'm going to side with Lowe's. Even though I like both companies, right now I will side with Lowe's. So there you have it, folks. A look at both of these home improvement giants. Down in the comments section below, let me know, do you prefer Home Depot or Lowe's moving forward? And if you enjoyed the video and want to see more videos like this, then do me a huge favor and click that like button down below. Subscribe to the channel so that you will be notified anytime we drop a new video. Thanks again for watching, and we'll see you in the next video. Take care.